Hi guys, welcome to today's stream. Let's give everybody a moment to join. I am streaming on both Darwinex and Darwinex Zero today again. So if anybody in the audience can confirm you can hear me, see my screen, that would be absolutely fantastic if somebody could do that. Tail, I can see you've put a couple of questions in. If there is time, can you explain the 25 trades needed to complete the calibration stage? My crypto account has 18 to 19, but I'm only at 26% calibration. I presume you mean 19 to be precise, and risk is at 46%. Can see and hear you. Perfect. Thank you for confirming. Okay, so yeah, there's a weird discrepancy with this, right? And let me pull up the actual document that explains it, because as always, when I'm trying to explain this sort of stuff, the more technical aspects, sometimes I don't do it justice in terms of, saying it exactly how it is. But as far as like my technical knowledge of the situation goes, is your first trade sets kind of the standard for the notional value of the risk that you put in the market. Every trading decision is therefore then based on the first sizing, if that makes sense. So if you were to trade a 10 lot and then decided to drop your risk by 10 or by a factor of 10 and started risking a 1 lot, it would take 10 decisions to factor into that one overall trading decision. That's how I believe it works, because I actually got affected by that. It once took me like 5 months to pass a calibration phase because of this issue. So let's see if I can find it. Welcome, guys. What is a risk equivalent trading decision? Okay. So in order to calculate the exposure of a trading decision, we follow the steps below. Our system calculates the market exposure of each position using the following formula. Exposure equals deleverage times time or duration of the position. Then to obtain 25 risk equivalent decisions, we perform the following scheme. The system takes as a reference the position with the greatest exposure and assigning... okay. So it doesn't have to be the first trade. It's just the trade that has the highest amount of exposure, and it uses that as kind of the baseline. To calculate how many representative decisions the remaining positions are equivalent to, there's this calculation I'm not even going to attempt to say. And then all positions representative decisions are added up to make 25 trading decisions. So all of that to say is a trading decision is based on the largest position size that you've taken. So again, if you've taken a 10 lot trade, for example, it's done by deleverage, but position sizing directly affects your deleverage. If you then were to drop your risk by a factor of 10 and was risking 1 lot, of course, you would need to effectively take 10 trades to build up one trading decision. It's obviously more advanced than how I'm saying it, but I'm trying to bring it into kind of layman terms. Okay, so it needs to be 25 trades with 0.1 lots in my case. Well, it completely depends on the notional value that you put through as your biggest trade. So whatever your biggest position was, that will be the baseline. So again, if that's a 10 lot trade, then you would need to be taking similar position sizes each time on each trade to make one trading decision. It's all based around that initial trade. And it all gets notionalized against the euro dollar. So I think it does say it here. So the deleverages Darwinex's own tool, standardizes the risk of all positions using the euro dollar as a reference. What's important to note as well, we create a synthetic position. So if you have multiple trades open, they will be combined into a synthetic position. That's the difference between a trade and a position. I think I did a video about that in the past, actually, somewhere. Might even be in our Discord. To calculate the deleverage, we're taking into account both the nominal leverage and the underlying volatility of all the trades open simultaneously. And we compare it with an unleveraged trade on the euro dollar. So no matter what asset you're trading, so if you're trading a crypto account and you're on Bitcoin, ETH, Solana, BNB, whichever it is, the deleverage and the underlying volatility of Bitcoin, ETH, Solana, BNB, for example, would then get notionalized against the euro dollar. So we have kind of a standard risk protocol across every single asset. I hope that makes sense. This is kind of the more advanced stuff, right? Which is why I do have a presentation. Like, I'm sure everybody has seen this presentation before. Where is it? I don't even know I've got TradingView open. I don't use it anymore, really. I do have this presentation, but I've done it a million times, and I believe these sessions are better as kind of a question and answer type forum. Because we do have hundreds of these sessions already recorded, and moving forward, I think I'm going to scrap the presentations and just have them as kind of a standalone video. So these are a perfect session to come in, jump in, have a conversation, have a chat, ask me any questions that you guys have. For example, like Tail has already done. There's about 165 people here right now, so it's a perfect time. If you've wondered about the risk engine, how we standardize risk on all assets, then this is a perfect time to get your questions answered. I can't always promise that I will have the answer straight away. However, if I can't find the answer, I will always come back to you. I'm not the most technical guy in the world. I'm a trader and I'm head of growth for Darwinex, right? So if it's something to do with some weird calculation that goes on the back end in the code, I don't always know. I don't always know those calculations. Just as a precursor to this session. However, I have been using Darwinex for years. I trade also, and so I'm very familiar with all of these concepts. Did I start the crypto account now? I actually haven't. I haven't given much thought to it. The reason being is I've been playing around with my second account, the second portfolio which actually might be good to go over now, right? And I'll explain why. BYXB. So this is my second portfolio. It copies all the same trades that XAQP has, which is the main portfolio. But then I also have two separate strategies running alongside the XAQP stuff. So I have a grid system and I also have a carry trade system. What they are designed to do is the grid system is designed to just chip away. It's super, super low risk. I have it running across multiple pairs, and it's just to chip away, tiny profits here and there. The drawdowns are quite low. Of course, there's always risk of a death spiral when you're grid trading, but at Darwin level, of course, the risk engine will likely intervene and scrap a load of my exposure anyway. So I'm happy to have that. The carry trade, I'm sat in trades for like weeks on assets like pound Mexican or dollar SEK, stuff like that, or dollar Singaporean dollar, because they pay positive swaps, right? So the idea of that is to get the positions long enough so that the swaps stack up, that you can kind of hedge against the drawdowns anyway. And I would say above anything else, it's more of a test account. But what I'm finding with these is I put so much work into building the logic beforehand, especially with XAQP, that they start as test accounts. And then after a few months, I'm like, actually, I built something pretty robust, right? Now, of course, with BYXB, it is much, much higher than XAQP. But I'm happy with that risk. Like I say, it started as a test account and is beginning to work well. The reason I think it's an interesting one to look at is because I do combine so many strategies, right? So this is super, super active. If we go back, when did it start? Towards the end of June. To answer your question, Tail, I have 3 Darwins. One is still in calibration phase. I'll show you that one as well. So we started at the end of June, so just a couple of months, and it's done 1,500 trades already. So an average average daily trade of almost 24 trades. So this is super, super active, right? And so you have to manage risk in a completely different way. If we look at my value at risk, it's to be fair, to say I'm grid trading, it's fairly consistent. It is slightly higher as I've raised the amount of strategies that are running in XAQP. What is the grid system? If it's okay to share the highlights. Yeah, okay. So the grid system is super, super simple, right? A little bit too simple. There's kind of no logic behind it. Essentially, what will happen, I'll bring it over so you can see it. So what happens, as an example, let's make the chart a little bit bigger so you can see. How are we doing, JC? Hope you're good. Let's say there was no trade on here and this candle closes bullish, it would buy the next candle. It is as simple as that on the time frame that you're operating on. It's not an EA that I coded. It's not one that I take credit for. It's pretty rubbish, just running it as a standard, but I've played around with it for the past couple of years. I've never really deployed it live. And I have it here to mainly generate swaps on the carry trades and to just churn small amounts of profits. But I have it running on the H4 time frame. I did have it running on the daily, but what was happening was it was triggering trades when spread blew out overnight. And so I was already massively down on a position, which kind of negated what I wanted to do. Oh yeah, this isn't my tail. This isn't my. I run it on a VPS, so this is just so I can manage the strategies or manage the portfolios, or not even manage them, just view them. Actually, it should be a new high for BYXB, to be fair. But I run them all on a VPS, so you can see I've got remote desktop connection down here. Where is it? Down there. So that's where I manage everything. What was I saying? Yeah, that's the basic of the grid system. Nothing special. But then it also trades all of my XAQP trades, which is this terminal. So again, I've run this on a VPS too, and I just have FX Blues trade copier, copying it over from one. So you have both the MetaTrader terminals on your PC to configure, then the one on the exactly, yeah. So the auto trading is always done on the VPS, right? I don't ever execute on my PC because I don't want to keep my PC online 24/7. Looks like I'm about to hit target on one of these dollar yen trades, which is stunning. But yeah, I don't want to keep my PC running 24/7, right? So I pay for a VPS. I think it costs me £18 a month, which means my terminals are always open, so I don't have to touch a single thing in. Never thought about it. I was team viewing to what? To a VPS. JC says, I'm good. Hope you're well. I am well, my friend. Just dropping in, say hello. We'll have to watch this back later on. Have a good session, folks. Awesome. It's because we're doing it a little bit earlier today, right? Thursdays are becoming trickier for me to do 4 p.m. Due to other commitments. But hopefully we can try and find a standard. I might just change the times up week in, week out anyway. I think I use FXVM. Is it? Let me pull it up. Yeah, so I use these guys. Oh, in fact, let's go to the. So I'm kind of doxing my personal email address. Yeah, VPS. 15% off too. I just pay for the basic VPS because all I'm doing is I have if I open it up, so connecting. So this is the terminal for XAQP. This is the terminal for LVFZ, which is my second portfolio, the one that's in, or third portfolio, I should say, the one that's in calibration phase right now. And here's my BYXB terminal also. So I have them all running on the VPS. I barely ever go on there. I go on there maybe once or twice a week just to ensure that everything's running smoothly. But I tend to keep it just switched off, and I monitor it on my terminals on my code. Referral code, me. I don't even know if I have a referral code. Let me take a look. FXVM, your portal. Doxing myself again. Affiliates. Now that's what we call a side hustle. Forget trading. I've got a side hustle from FXVM. Is risk calculated based on the floating with the currently open positions or only on the equity curve? So the risk is based on any open net exposure. So I don't know if you was in the session earlier on. I said every single trade is combined into a synthetic position. So the position is where we take your value at risk from. So if you have 10 trades open, maybe euro dollar, pound dollar, euro yen, etc., we combine those into a synthetic position, nominalize the notional value against the euro dollar, and that's where we take the risk from. So yeah, it's floating and open positions. We don't take it from the equity curve. What was I saying before we got into that? Yeah, what were you talking about, Tail? You team view it in, as in, like, do you have a PC at home that runs your terminals? Cool, thanks, Matt. I'm just flabbergasted how I did not think about just configuring it on my PC and not to open my friend's Windows machine every time. So you have it running on your friend's PC and you just you team viewer into that PC every time that you need to make a change. That's funny, those. Where's yeah. Ah, look at that, typical. That skirting the old TP. Right on the nose. I've had this a couple of times over the past couple of days. So I had bring up the Nasdaq. I want it to show previous trades. Show where are we? Does it show real volumes? No, show trade history. So it's not showing trade history. Have I got the colors turned off or something? Am I being stupid here? I'm being dense or something. Let's close that down. Let's open another chart up. There we go. So you can see the trade. So I hit target on Nasdaq trade earlier. So that one hit. But then took a loss on Nasdaq yesterday, and my target was literally there. It ran straight into the target, touched it on the nose, and then just absolutely caked it for 2 days. And this is the problem, right, with leaving discretionary trading kind of at the door and then coming into systematic algo trading. It's very difficult. Like when price was pushing right against that target, if I was a discretionary trader, I would close that position. There's a quote from Tom Dante, and it always stuck with me, is don't be a DICK for a tick, right? I can't say it on stream because got to be professional, right? But don't be a DICK for a tick, or don't be a DICK for a TICK. So when it's that close to your target, it's kind of like, well, if you're risking 90 pips to make an additional 1 or 2 pips, it doesn't make sense to hold that trade. But when you have refined your strategies to the point where you know the exact expected value, you cannot start getting involved, or at least this is the way I see it. Like if I start getting involved, I mess up with all of the probabilities, not only at single strategy level, but all of the calculations and Monte Carlo tests out of samples that I've done on the portfolio level as well, because I'm starting to play around with the probabilities, the win rates, the expectancy per trade. And yeah, that's never, ever, ever good. Again, I appreciate that this session is labeled the risk engine session. I don't really want to do a presentation. Again, I don't think that's the best use of anybody's time. So if you do have any questions about the risk engine, how we calculate risk, how it appears, Darwin versus MetaTrader, I'm happy to answer any questions over those. We have about, I need to leave about, I would say 10 to 3. So we've got a good half an hour. Okay. So it'd be good to have some good conversations with you guys. There's about 350 people on the stream right now. So again, if you have any questions, please shoot them in, whether you're watching it on X or YouTube for Darwinex or Darwinex Zero. I'm happy to cover any topics. I'm also happy to go through the presentation, but no one wants on a, what is it, 1/2 through New York Open to be watching me do a presentation. In fact, we can watch New York Open together. Is there any news coming out today? Let's take a look. Filter it down. We don't want to see the noise. Don't really care about any of that sort of stuff. Okay, everything's done for the day. I didn't realize it was the Bank of England decision today. 4% unchanged. I didn't even realize. I don't check the calendar too much these days, to be fair. But nothing major for the US session. What's interesting is BYXB is going positive territory for the first time in weeks. I've been sat in carry trades for weeks and weeks and weeks. Taylor said, on one account, I have a 6 VAR, 1.62 minimum VAR, 3.75 max, and 1 month variation is 107%. Other is 7.9. There's a lot of numbers there. There's a lot of numbers there. Here we go. Target time. Close that bad boy. I also said I was going to show you. I was going to show you my third Darwin, right? The one that's in calibration. I'll bring up the statement for it. Let's refresh it on FX Blue. I do also have the terminal, so we can take a look at the terminal. The key difference between this account, so this is I always forget. LVFZ, not LFVZ. This is LVFZ. It's been on absolute tear since I started it. Like, that's just completely accidental, with a load of luck involved. This is the actual MetaTrader terminal. So if I bring up the trade history, started it at the beginning of September, so it's not even had a month. And I mean, that is way above the expectancy of this portfolio that I kind of expecting now, a bit of a pullback. My win rate isn't this high and my expected value isn't that high. So yeah, I am very, very aware and holistic to the fact that the portfolio is not meant to perform that well. Or at least maybe it does in periods of time, right? But it's not always gonna perform at that level. You're the numbers guy. Like I say in all the strategy development sessions, I was a data analyst before I become a trader. So I like logic in everything that I do. I like to understand all of these different things. I don't just like to learn a chart pattern or learn a system and be like, okay, that is gospel. I need to do that for the rest of my time. I want to understand what's happening behind the scenes, all of these different figures. So yeah, I mean, I guess you could call me the numbers guy. So this is LVFZ. It hasn't been updated today, so it's actually lower. So I took a $500 loss yesterday on one of the strategies. We're currently up 154. So the equity is 104,708 right now, as you can see on here. Equity 104,709. So it is slightly lower. It's in a dollar yen long. There we go. The target's been hit on that one. We've got another order set above. Maybe we'll trigger that today as well. What does that do to XAQP? Because XAQP also had a bit of a pullback yesterday, which is absolutely fine. It should be back above 123, I would imagine. Yeah, there we go. 123.26. So back at the highs, really. I think their all-time high was 124. Yeah, 124.19. That was yesterday pre-Fed decision. On the Fed decision, I got smoked and I made a couple of good trades. So is what it is. Anyway, LVFZ is the exact same portfolio as XAQP. However, the risk weightings are completely different. So XAQP has 27 strategies running on it, whereas LVFZ has 21. Those aren't equally weighted. So on XAQP, each strategy is allocated 1% max drawdown. So what I have is the data or historical data for the past 10 years on all of these 27 strategies. And I risk adjust them so that over those 10 years, the max drawdown was only ever 1%. Okay. And that's the risk level that I run them moving forward. So they don't all trade the same size. They don't all win or lose the same amount dollar-wise. However, the amount of exposure I give to each system is roughly the same. With LVFZ, it's a little bit more of an aggressive portfolio. I have increased the risk on the majority of the strategies, but I've also given higher weightings to the portfolio or of the portfolio to the better strategies. So the ones with better risk adjusted metrics, the ones that are a little bit more robust and the ones that are generally perform month on month better. MT4 backtesting is awful. I find 90% of the time backtesting on MT4 doesn't even work. It won't pull the data through correctly. MT5, I usually do my base backtests on MT5. And then I do some work on strategy quant analyzer. I basically, once I've built a system, I'll backtest it to see if it has legs. So I'll run the strategy through MetaTrader 5 backtesting tool. I'll try and give it as close to live conditions as possible. So I'll try and give it things like current spread, or if it's like at the most liquid time of day where the current spread is probably the best spread you're going to get for the day, I might tune it up, right? So I'm increasing the cost of the trade, essentially, trying to give it as hard a time as possible to perform. If it performs without me doing any major optimizations or changes to the parameters on the single strategy settings, then I know the strategy has legs, and I'll be like, okay, I'm happy to develop this further. If I run it and it just loses money consistently, I'm like, I don't want to sit there, waste time optimizing the settings of the strategy, because it clearly doesn't work as a baseline system. And if I wait, I didn't think you'd be able to hear that. She sat watching out the window again. I mean, she's a Rottweiler, right? So she has this like natural natural just guarding instinct that you can't turn off. No matter how many times you tell her to be quiet, she will always go back to that natural instinct. But yeah, if I run a strategy and it clearly doesn't work, I just leave it at the door. I'm like, okay, let's move on. Let's not waste any more time. Whereas if it's positive and it does well or okay, I will then put it through some stress tests. I will change the parameters slightly. If I change the target, for example, from, I don't know, 1% to 1.1% and the strategy blows up, well, you know it's probably overfitted and it's not going to be as robust when you take it live or move forward with the system. If the results don't change too much, for example, if I'm testing it from 0.75% target to a 1.25% target and I'm testing it at 0.5 intervals and the P&L will change, but it changes ever so slightly, then I know that regardless of which setting I have, it's pretty robust, right? And I essentially am just trying to break the strategy down. I'm trying to do anything I can, throwing everything at the wall, trying to break the strategy. If it survives, it moves to the portfolio. I run Monte Carlos at strategy level, again, trying to break it down at every time. And then when I include it in the portfolio, I then run a portfolio Monte Carlo. So even if one of those strategies underperforms, or if one of the strategies just stops working, if the edge evaporates into thin air, at least I know the portfolio is robust enough to continue moving forward without it. Also, I DM'd you, but you can ignore it since you somehow covered it last session. I'm sorry, did you DM me on Discord? I think I have like 13. No, actually, I'll show you my Discord right now. So you can see I have 13 unread messages in my DM requests. Let me message BOFH. I actually don't. So I have all of these messages. I have 13 in my DM requests, and it's kind of like if I go through them all and answer everybody, by the time I've gone through them all, I have another 10 to go through. So I apologize. It does take me some time usually to get back to direct messages. You can't, flinging my mic around. Okay. If in future you have something that's a little bit more pressing or important, feel free to email me. I'll pop my email in the chat just so that you have it. Kieran.duff@darwinex.com. So feel free to ping me an email on that if you ever need anything that's a little bit more pressing. If not, you can tag me in the Discord chat and just be like, dude, check your messages. I need to talk to you. Okay, back to LVFZ. So like I say, it's a little bit of higher risk portfolio. Portfolio weightings are more weighted towards the better strategies. That one or the leaks. If you send an email to my leaked one, it'll go straight to. I'll set a rule straight to trash. Darwinex Zero. Let me log in. I lose track of all of my logins for Darwinex. Log in. Here we go. I'm doxing myself again, and it's not even on there. Great. All that was for nothing. Kieran Duff 52 maybe at gmail.com. Let's see. Maybe it's Kieran. Here we go. Remembered it first time. So this is the one that's in calibration at the moment. 66 days done. So it's only 10 days old. So this is like a baby. This is brand new. 66% risk calibration. So it looks like my risk is pretty stable throughout positions. So I should tick those both off at the same time. Again, this shows the updated statistics. So FX Blue was a day behind. My range return 4.51, although it is slightly higher than that. It's 7.1 now, but the trade isn't closed. Yeah, that's all there is. There ain't much to look at when the Darwin's not live, but I have a feeling that this Darwin is going to come out there and shoot up the ranks. There's actually changes coming to the way that we calculate Darwinia Silver. We will be, and this goes back to a load of feedback that we've had over the past year or so from some of our more experienced traders. When I say experienced traders, I mean people who've been with Darwinex for a lot longer. So we're going to be giving traders a benefit the longer their record is within the rating. Okay, so essentially, if your record is a year old, then you will get bonus points in the rating. Okay, so as it stands, the rating currently has your current month's return, your previous 5 months return, and your previous 6 months drawdown. But now we're adding a fourth metric in there to say you basically get a benefit the longer your record is. And the reason that we're doing that is because we don't want to punish traders who've been with us for a long period of time. They're just going through a drawdown patch and then they don't get allocation for 3 months. It doesn't seem fair. So we want to be able to give allocation to as many people as possible, and therefore we're trying to make it a little bit more fair. Gold is a percentage gain only, right? Yeah, that's absolutely correct. So we don't have the leaderboard in gold. Well, we have the leaderboard, but we don't have the rating where we base it on those 3 metrics or 4 metrics. We just do it based on how much you gain in that month. So what is your return in that month? You should be a year older if you're from 95. I'm from 96. Yeah, I am a 95 baby, which means I think I experienced a good generation, right? Like I experienced some good stuff in 2000. Like I'm old enough to remember the 2000s. I'm too young really to remember the 90s. Like I say I'm a 90s baby, but I don't remember too much about that kind of time period. But I feel old, mate. I'll be completely honest with you. I got 2 kids. One of them's at school now. And that makes me feel like an old bloke. Like, I'll be completely honest with you. I might not look it, but yeah, I am an old bloke. Yes, your last question, silver is more than just percentage, if I'm not mistaken. Correct. It's those 3 metrics and now soon to be the 4th metric also, which is how long your track record is. Also, while you guys are on, I want to remind you that I will be attending, myself and one of my team members, Giorgio. We will be attending the Prop Trading Expo in London next Saturday. So if you want to book a ticket, it's proptradingexpo.com. If you scroll down here, it's £20 for a ticket, but if you put code in DAR0, then you'll be able to get a ticket for £10. Like I say, myself and Giorgio will be on the Darwinex Zero stand. I will also be walking around the event, having a chat with people. So if you want to come and meet me, it's a perfect place to do that. I'm going to be there. It starts at 8:30 and ends at 7. Like, that's a long event, man. That is a long time. So I don't think I'm going to be getting there probably till about 10 o'clock, 10:30, to be honest. I'm going to try and leave as early as possible. In fact, train line. Who knew we'd be looking at train line on the old risk engine session, right? Let's have a look. In fact, no, I'm not going to do that because I'll dox where I live. I thought I ain't going to do that because the train station's literally like 5 minutes away from where I am. Exactly. That's why we did it, Sal. So that traders who've been around for longer, or at least committed to Darwinex Zero for longer, or Darwinex, they will gain. I don't know if bonus is the right word. I mean, bonus points or bonus rating, maybe a boost. So like, it will be easier. What we don't want, and what we've happened, and XAQP also did this, right, is the month where XAQP passed calibration phase, it was a phenomenal month. And so it shot me right to the top of the leaderboard. Like I think I was 100th and I only had 1 month's record. Maybe it wasn't 100th. I can't remember exactly where. We're in the second dollar yen position. Let's take a look. Darwin. Let's see where I actually ended on the first month. No. Yeah, so this was the first month, right? So it went live at the end of May, and I shot to 179th, but I had no previous drawdown. I had no previous return. It was all based on that current month's return, which is good, but it's a little bit unfair to shove me above, 8,000 other traders when I have, a month's worth of record. Like it doesn't seem very fair. So at least if the guys who have built the record for, a year and a half, at least if they're getting that little push up where it's kind of like, we know you're consistent. We know you've been doing this for the past year and a half. So you kind of get that little boost as well to stop this sort of thing. Like, it's great for me because I got 40K allocation in my first month. But it's also a little bit unfair. And I acknowledge that, even though it benefited me at that time. Last month, my 2 accounts was nuts, 64th and 50th. Love that, dude. Absolutely love that. I need to sign back into XAQP. I've never been bothered about my rating. Like it's just not something that bothers me until I become single digit rating. And then it's kind of like it really hit me. So at the minute, I'm back in 7th now. So I was in 8th this morning, but we're up a little bit today. So I'm 7th out of 8,820 people, which is just mind blowing to me. Like I've always been a decent trader. Like I've had good periods. I've had equally really poor periods. And so to be number 7th out of almost 9,000 people, like it doesn't even compute with me. And like I say, I never cared about my rating until I got under 10. As soon as I was in that single digit territory, it was like this weird primal competitive spirit took over me. And I was like, right, this is it. And I texted Ignacio and what did I say? I said, if I end up this month in number 1 position, I'm going to fly over to Madrid and there's this big road called the Gran Via. That runs through all of Madrid, Gran Via. This road, right? And it goes basically top to bottom of the city of Madrid, which, FYI, if you've never been to Madrid before, please go. It is one of the most stunning cities you will ever go to. And I said, I'm going to do a naked mile up the Gran Via if I finish number 1. Like this ultra competitive spirit has just taken over me, and I don't know why. So I'm hoping I can get to that number 1 position. Kind of need Darwin to keep shooting up today. If Darwin carries on, clips this, and then closes a nice target, I think I might stand in a chance. In fact, let's take a look. Darwin and Silver. Tal says, I'm not chasing allocations anymore. I'm full on a boosters guy. Yeah, I always say to everybody, like, even myself, right? I'm now being competitive. Like, I want to be number 1, but also at the same time, I'm not going to do anything that's going to hinder my progress. Like, I'm also not bothered if I don't get to number 1 position. And it's kind of like, don't put these imaginary hurdles in your way, trying to put too much pressure on certain things. Like, it's not the end of the world. You know, just let your edge do its thing and compound it over time. Like if this month you get an allocation, fantastic. If you don't, well, okay, what's the biggest downside that you've had? 38 euros a month subscription. Like you can make that back with 1 allocation. Do you know what I mean? So here we are, XAQP 15 6 4 14 6 3. That's going to be tough to these guys. 13 6 3. Yeah, it's going to be tough for me to climb. What's my current month's return? 16 6. Oh no, what? I should well be above PAQO. I got a better 5 months return, better current month's return. It's just my max drawdowns slightly lower. Let's take a look at this. Darwin rating. So I thought your past 5 months return. Yeah, previous 5 months return is 67% of the calculation. Current month's return is 22%. By which nature I should be far above PAQO. Considering the max drawdown is only 1%, but it's 11% of the calculation. I repute this. Change the drawdown in the code. I mean, I wouldn't be able to even if I wanted to, dude. Even if I wanted to. There we go. The best anti-burglar device you will ever have is just getting a Rottweiler. Let me tell you that. Hey, come here. Up here. You're disturbing us on stream. Come over here. There we are. She's upstairs with me now, so hopefully she won't bark and disturb us anymore. Someone's at my door now. Great. Hey. Oh, guys, it's a window cleaner. I've got to go and open my back gate. Bear with me 2 seconds. I am back. Apologies for that, guys. I forgot I needed to close the windows for the window cleaner. Okay, we have 5 minutes left. So, guys, if you have any final questions about the risk engine or anything to do with Darwinex, now is your time. I'm also out of breath because I live in a 3-story house, so I'm chasing a Rottweiler up and down the stairs, trying to get it to stop barking. It takes it out of you. Come on, sit down. Looks like we're about to Clark TP on this as well. Let's check on BYXB. What on earth is going on? So one of the interesting trades. Ooh, dollar sec has done it. So that's why dollar sec was a carry trade. I mean, when I say a carry trade, right, obviously I'm not playing with billions of dollars. So the carry is going to be relatively small. How do we get it? Time closed, dollar sec. Here we go. So we have, how much was that? $400 on the last, $200 here. So I'm up for that trade. Oh, quite a bit, actually. That closed quite a bit. Nice. Swaps, all positive, nothing major. I don't think dollar sec is that good. It's dollar Singaporean dollar is the decent one. So charge of 10 cents, 274 swap. Really trying to run those positions. Like I say, I'm not bothered about them hitting target. It is nice when they do, of course. Like that dollar sec position has just netted quite a fair bit. Probably put BYXB up a lot, but I have relatively big targets. I would be very, very happy if this just keeps churning here, right? Because it's just going to keep adding swap fees, and I'm just going to keep carrying that position. If it hits target, fantastic. I make money. Until that point, I'm not really too bothered. I run it at such low risk that the drawdown is fairly easy to manage anyway. So it's not too big of a stress. Hit target on that dollar yen again. So today is kind of recovering what I lost on the Fed rates yesterday, which again wasn't too much, but we should be climbing back up. 1, 2, 3, 5, 5. Looking good here. And then let's bring BYXB. This is a more interesting one today, I think. Yeah, there we go. Whoa, what a rally today. Oh, wow. Okay. So BYXB, I was considering closing down, right? Like I said earlier on, it was a test account for so long, and I was trying different things. And then I refined it. I think I refined it after this, because what I was doing at this point is I was running the grid system on the H1. I then did further testing and I realized my drawdowns were a lot higher than I thought they were going to be. So I switched it up, put it to the D1. Then, like I said, I was getting blown out by spread, reduced it to the H4 and optimized it a hell of a lot. Added the carry trade system in and re-optimized the risk allocation to the XAQP trades. Since then, it's been sat just in a period of stagnation. However, during that time, it's been building these positions for the carry trades. So I'm not too bothered. Over the past couple of days, it's unloaded or unwinded a lot of the positions that I've been holding for this whole period of time. So I wouldn't be surprised if this equity curve, let me bring my pen up. I wouldn't be surprised if this equity curve does something similar to this over time, right? Where it goes up, stagnation, up, stagnation, up, stagnation, because that's kind of how I've designed it, right? So you can see this period is the stagnation, just chopping about, building the positions. We unload the positions, chop about. Usually it's going to take a key bit of data or a key bit of like macro push, like yesterday's Fed decision, to give us that push, allow me to unwind those positions, and then we'll go into a period of position building again. It's a new way of trading. I haven't done anything like this before, so and I'll be completely honest, I'm pretty much learning on the job, right? Even with XAQP, I've been learning on the job the whole time, how to algo trade, how to build portfolios, how to do all of this sort of stuff. So this is new to me. I absolutely love it. But there's a lot that goes into learning all this sort of stuff. Taz says I'm at an all-time high myself on WXBY. Let's take a look. We've got a few more minutes left. WXBY, 4.3% more for gold. Fantastic, dude. Good to hear that. I just need time now for gold. I've got the rest. I just need 8 months. I think it's December. I think December ticked my 8th month because I started at the end of April. So really, it's like 28th of May or so was my first month, then June, 2nd, July, August, September, October, November, December. So the 28th of December will be my 8th month. Then Darwinia closes just after that. So I think going into January, then I'll be into gold. Wait for me. I'll wait for you. Is there a grid sort of strategy here? Just because these drawdowns look a little bit gritty. There's nothing wrong with that. Just curious. Yeah, this looks good, dude. That's super stable. Your drawdowns are virtually the same as mine, also. Yeah, this looks like a grid martingale, but the value at risk is super stable, which is fantastic. When did you start? April. So what of April? Okay, so it was the end of April. So it's the similar as me. I think you'll be in December. So it'll be May is your first month, June, July, August, September, October, November, December. So you'll tick over onto gold in December, meaning that you'll actually be in gold in January. Yeah, 308 out of 8,000. Fantastic work. Absolutely fantastic. You got a hell of a lot of AUM, dude. You must be raking it in now. I presume that's the permanent allocation and the boosters as you was talking about before. Yeah, it's slow and steady grid. Yeah. I personally, like, there's a lot of risk with grid and martingales, but if you use them correctly, they can be super powerful too. Moen said, keep up with these sessions. This is my first month in silver, up approximately 10% so far this month. Absolutely fantastic work, dude. That's phenomenal. Will I be able to get better rankings as my track record continues to develop further in the coming months? Yes, you will. So you might have missed it, but earlier on in the session, I was talking about how the rating right now is calculated based on your return in the previous 5 months, your max drawdown for the previous 6 months, and your current month's return. We're about to make a change where we add track record longevity to that. So the longer your record, you'll get a bit of a boost on that rating as well. So you get a few extra points in the rating. So yes, keep performing, then your rating will increase. But not only that, we're adding something in to help boost your record the longer it is. WXBY is like a martingale. I think it's more grid than martingale. I could be wrong. Tail might be able to elaborate on that. Also, Moen, I appreciate the love for the sessions. I will be just continue to do these. I enjoy doing them. I don't like doing the presentations anymore. I think we have so many of those live and recorded on our YouTube. I don't need to do them anymore. I much prefer doing these sort of interactive sessions where we talk trading, Darwin's, markets, all that sort of good stuff. 300k is boosters and permanent allocation. Yeah, I did think that. Anyway, guys, it is time for me to call it a session. Dollar yen still moving. It's time for me to call it a session because I have to dip now. I have something going on in 10 minutes. I need to get prepared for it. I will be back. What day are we? Thursday. So I won't be back tomorrow. Unless, who knows, maybe I'll jump on session tomorrow. I don't think I have anything pressing on tomorrow, so we'll see what I have on my plate tomorrow. If I have some spare time, I will jump on, do kind of an ad hoc stream to end the week. Is there any news coming out tomorrow? I can't even remember. Yeah. Head's gone. Mind's blank. Who knows? Who cares? Anyway, guys, I appreciate every single one of you joining the session. As always, it's always great to have a chat with you guys and to answer questions and go through certain things with you. I appreciate every single person who has tuned in. Again, without you guys, these sessions are nothing. It's just a weirdo talking to a camera. I will enjoy the rest of my day. Thank you, dude. And I hope you do too. And I will catch you all either tomorrow or on Tuesday next week when we'll be back to do our welcome session. But again, it will be something more flexible like this. So guys, I hope you have a fantastic rest of your morning, afternoon, or evening, wherever you're based in the world. And until next time, have a fantastic one, and I'll catch you in the next stream.